Good evening and welcome. Welcome. How quick the weeks are rolling. No two ways about it. It was a beautiful day today too. So managed to get out for about a 15-minute walk in the middle of the day, and that felt like is what I needed to get my head cleared and ready for an unbelievable presentation here this evening on JobKeeper. You know, a conversation for many of us in business, regardless what industry you're in, regardless what level of business you're in. JobKeeper and its continual, I guess, impact to businesses far and wide across Australia, and no two ways different for our community here at Business Benchmark Group. So, you know, our discussion this evening in as it relates to JobKeeper, our discussion this evening, as it will be shared with two voices of authority, Darren and Frank from LMP Accountants. LMP Accountants have been, SME specialists, small, medium business specialists for almost, for over 20 years. LMP has been operating and they manage over 1,000 businesses at any given time. And they cover all spectrum as it relates to accounting and tax planning and all the impacts of a decent accountancy practice. So I'm really excited to have both Frank and Darren here this afternoon to be sharing with each of us, plenty of things as it relates to government stimulus, but more specifically around the impact that JobKeeper is making in the small business world, and its continual opportunity each month to participate. So there's a lot that we're going to get through this afternoon. Please understand, it is legal. It is, law. It is, to a certain degree, dry and very black and white. But both Darren and Frank, within their areas of expertise and the sharing of our presentation this evening, will be doing their best to make what is a very dry topic something that we can all understand with a lot more clarity. And therefore, if I have clarity, I have control. And if I have control, I can execute according to what is within my domain, feeling and knowing that I'm not overstepping the law. So very important to know that. Now, Darren Haycraft, who is one of the senior partners at LMP, chartered accountant, been at the front of accounting and business advice for over 20 years. Areas of expertise: business structuring, including asset protection, succession planning and associated issues, tax planning, tax implications of property subdivision and development, and so much more. Frank Vetere, CPA membership, chartered tax advisor, self-managed super funds, succession planning, retirement planning, tax saving strategies, which I love to hear, and capital gains tax. Again, the usual suspects as it relates to senior partners with authority and thousands of hours of professional experience. We welcome Frank and Darren to share with us specifically JobKeeper and what it takes to be in a position of clarity, which ultimately equals control. Over to you guys.
Good evening, everyone. I'm Darren from LMP Accountants, as Stefan said. Frank and I are going to go through JobKeeper. As Stefan said, it is a little bit dry, unfortunately, but we're going to focus on a bit more than the basics, and hopefully help all of you learn a bit more and be prepared for the next steps. So just to take you back to the start, sorry, we've got to put the disclaimer up. So this is a very technical area. You really need to make sure you speak to your accountant or bookkeeper about this to make sure that you're doing the right thing. So what we're going to go through today is just a quick discussion about what JobKeeper is, and then a very quick discussion about the basic test. Then we're going to focus on the alternate tests. Frank's going to run through an example of one of the alternate tests. And then probably the most important part we've found is once you've enrolled, what do you have to do next? So, and Frank will run through that. So to go back to the start, JobKeeper is all about you as a business being affected by COVID-19, the percentage that the government's talked about is 30%. So employers can choose to participate, you don't have to, but once you participate, you have to nominate all of your employees. So sole traders and other entities that don't have employees or are not paying the owners as employees are still eligible. The most important part is that the government has said that once you decide to go in, that it's one in, all in. So you got to be really careful about that. We've had a lot of discussion with our clients about how to move around those rules. But when the Treasurer comes out and says that it's one in, all in, and the ATOs come out as well, you've got to make sure you do it all correctly. So the initial information that was released was all about the basic test. So the basic tests are fairly straightforward. If you've dropped by 30% in your turnover, not your profit, just your turnover, then you might be eligible. So the way they've compared that is it's either the month of March or the month of April to be able to get into this from the start, from the 30th of March. You can qualify at a later time with the turnover month being May through to September. There was also an option where you can compare the April to June quarter or the July to September quarter of the current year versus the quarter from last year. So some of this involves projecting your turnover in advance, which is quite a challenge. We are going to talk about that later on. Now, one of the biggest things that we've spoken to our clients about is cash versus accruals. So the Treasury originally didn't really discuss it. When it went to the ATO said sort of that you could, if you're on a cash basis, that you could choose either cash or accruals, kind of depended on your interpretation of the way they wrote it. If you're on an accruals basis, they expect you to stick with accruals. But just recently, about a week ago, the ATO came out with a ruling and they said that if you're on the cash basis, you can choose either accruals or cash to work out whether you've had the 30% drop, and that was really important. So if you're on the accruals basis, you can choose cash, but they have said that they could possibly investigate why you've changed from accruals to cash. We don't know what questions they're going to ask yet, but as long as you can prove your 30% turnover drop, then you should be okay. So the alternate tests for a drop in turnover, they're the ones that are sort of outside of their basic ones. So where you actually have to think a bit beyond the basics of just comparing this year to last year. So some of the alternate tests we've listed here, so I'll just run through them quickly. An entity can commence business sort of after the relevant comparison period, so that's basically after 1st of March last year. The entity is acquired or disposed of a part of the business after the relevant comparison period, so once again being March 2019. The entity undertook a restructure after the relevant comparison period. So what they've talked about with a restructure is at least a 10% change in the way you run your business, or that you've changed from a sole trader to a company or something similar. Another one is the entity was affected by a drought or other declared natural disaster. We've had a couple of clients that I've spoken to about that. One of the big ones is an entity has a large irregular variance in their turnover. So like builders and a lot of people in construction where they get paid after doing quite a bit of work. So to compare to this time last year is quite a challenge. The next one is if you're a small business where you really only have yourself or maybe yourself and one other person, where one of you has been sick or injured or been unavailable to work 12 months ago. So, and the one that we're going to go through today, or Frank will go through, is the substantial increase in turnover test, which is quite an interesting calculation to work out. And this is by far the test that outside of the basic test, this is the test that we've had the most questions about. And based on discussions with Stefan, we think that this will be the test that will most impact you that are watching today.
So Darren, before we go on to that, so we're getting a number of questions coming up at this point. So we encourage everyone to ensure you participate, stay engaged, ask the questions. We know this is not it's not a marketing seminar, which is a little more fun and, pretty colours. This is, however, a very important sharing as it relates to, 3 weeks ago, Darren, 20% of our clients were eligible based on the basic test. And as you know, being very closely associated with Business Benchmark Group, the majority of our clients experience growth within our space within the first 12 months. So I guess the government has created this alternative test to ensure businesses that have had a good growth curve in the last 12 months and are now suffering in recent times because of COVID don't get penalised, and they're trying to incentivise people being employed, and therefore the employer gets subsidised to keep people on versus they've had a sudden downturn, but it's not enough to be 30%. So the alternative test, when I looked at this 3 weekends ago, my calculation, looking at all the key numbers for all our clients, meant that 80% of our clients, looking at your rolling cash flow projections, guys and girls, is now equaling over 80% of our clients in one way or another across the various ways, and there's plenty of various ways on the alternative test. 80% of our clients are now eligible to be confirmed, which is an astronomical difference from the 20% 4 weeks ago. And I'm really looking forward to this sharing. And I thank you, Darren and Frank, for really putting the spotlight on this, because I still feel, and I can see it in our community, people are very, they're a little confused about how do we do the alternative test. And what you're going to demonstrate in a couple of moments in the next 20 minutes is it's quite simple if you just focus. Now, I will say one more thing before I hand over back to you, Darren. So please, anyone and everyone, we've got about 6 or 7 questions thus far. We're going to answer every one of your questions before tonight is over. If I personally need to stay here till 9 p.m, I will. If Darren and Frank want to, I'm sure they will too. But the point is, get engaged, get curious. There is no silly question as it relates to a stimulus package that could be, if you are eligible, the difference for you. Very important. But before I hand over to you, it is important to understand that whole cash versus accrual basis accounting. My advice, which is very different to a certain degree from your advice, Darren, I want everyone in our community to be aware of accrual and cash, even though you may be accounting for your business in accrual typically, but you report your BAS on a cash basis. I want you to also be aware of the accrual and the cash numbers, because literally that takes an extra 5 minutes to look at that one, whether you're using MYOB or Xero. I want you to be aware of both numbers, so that puts you in a position of clarity. Dare me say, if the ATO calls you in 373 days' time. Over to you, Darren.
Well, it's a good segue, because Frank's going to run through the alternate test, so I'll stop sharing my screen and Frank can step in and take over from here.
No worries. All right, there we go. Let's go. Sorry. I can't. Hello, everybody. Can you hear me?
All good, Frank.
Okay, that's all right. I'm just trying to start the video so you can actually see me. So just following on a couple of the points that Darren actually made, what is critically important is documentation. Can't sort of stress it so much because the thing is that, when the ATO finally, they will get to a stage that they will call people and they will contact people. They're going to base it upon your documentation. Now, a lot of people have reliance on, cloud software, which is absolutely great. But the thing is, when you're actually doing your calculations, you're looking at things today. So if you're looking at things today to make your decision, like in terms of your projections and things like that, it's important that you actually have it printed down, something saved, save it electronically, save it as many ways that you can. Because the thing is, if when your computer system goes down, look, who knows with the software programs, they could go down. You just got to make sure you've got it in. I love paper, but I also like having things backed up. So that's from my little take on additional points from Darren. So I'll go through to the the alternative tests, and in the one in particular that we're actually have helped many clients in is in relation to the significant increase in the turnover. So basically, in regards to this, this would be beneficial to those that have actually had some growth. Where you've had the growth from one year to another, with a basic test with a drop of 30%, in some cases from month to month or quarter to quarter, may not be eligible. And this one here is actually a really good one in particular, where they give you the opportunity to look over the last 12 months, the last 6 months, and the last 3 months. So over the 12-month period, a 50% increase, over a 6-month period being the 25%, and 12.5% in relation to the 3-month period. Now, if you look at the example that I've actually provided to you, you could actually see that, and I've actually really made it simple. When these rules had come out in the first instance, there was a lot of confusion that was out there. However, what's happened is that since then, there's been, in the last 2-3 weeks, there's been additional information, explanatory, more moratoriums that have been released. And as a result of it, there's been some examples. So in this example here, we've got the April test period, which was the drop, okay? So we know in relation to JobKeeper, there has to be the drop. There's a lot of misconception out there that if your business has grown by 50%, you're actually in. It's not the case. It's actually a 2-step process. So in this example, we're looking at the for the 6-month period. So April 20 has been where the drop period has been. So we look at the 6-month period prior to that. And what we actually do is we actually compare the figure for September through to, for the month of September through to the month of March. So if, say, the March month is in excess of 25% of the September month, and you've had a drop from the quarter January, February, March, so it's an actual calculation. So you've got to work out the average GST turnover for the months of January, February, March. If there has been a drop from that quarter divided by the April month, then you will be in JobKeeper if the fall is in 30% or more. So it is quite a little bit confusing, to say the least, and as you can see from this example here. So it really comes down to if you've got the drop. So that's if it's for the 3-month period. There's one for the 3-month period, and this is the example in the 3-month period. So realistically, from significant increase, it's a very tricky one. And as I've basically started off with the example of saying that you just need to make sure that you've got your paperwork to back everything up, because that is actually, absolutely critical. Okay. Now, as I said, that was the main test that we've gone past. Now, once you've actually registered and you've actually enrolled,
Frank, before you go on, so guys, our instruction regarding your 26-week rolling cash flow, I guess, mandatory behavior. As you complete a week, take a screenshot and print it, and that's on your summary page, and save that. And if you save that for the next 52 weeks, you're going to have more than enough evidence for what, I guess, was your influence for your projections, okay? So utilize your Xero and MyObs, but also utilize the 26-week rolling cash flow tool that you are all working on. And I guess, you know, we've got a whole heap of people on the webinar right now. And if your clients of Business Benchmark Group, your work in the last 8 weeks with the 26-week rolling cash flow, as long as you're saving it and calling it week 1, week 2, week 3, and keep on going, that is, as long as you can save it and print it, and I'll correct, print all 3 pages, summary, cash in and cash out, put that in a file, because that is lock, stock and barrel what you were thinking and the tactical approach for how you projected your income at the early stages of what Frank has just shared. Sorry, Frank, I just thought I'd make that point.
No, that's fine.
Back to you.
No, that's okay. So as I said, there are the other alternative tests, but you know, for the purpose of this this webinar, we've just gone through the one that in most cases has been more applicable, especially with businesses they've got growth. We've had a number of people that have actually gone through the test and have actually said that you know, they had no chance of passing it. And as soon as we started discussing some of these alternative tests, we've actually opened up their mind. So so the thing is, as I said, it's just created an opportunity for them to be part of it, you know, to keep people employed, because that's the whole purpose of this this measure. So once you've actually passed the tests and you have enrolled, these are the next steps. So the step is, first of all, you need to, as you can actually see from the screenshot, you need to enroll yourself when you go into the business portal, and it basically looks like this. So step 2 is identify and maintain your employees eligible for the JobKeeper wage subsidies. Now, for those that have got your Xeros and you've got your MyObs, and I'm not too sure about the other products, but the software can actually do most of this itself. So where it can identify, but in terms of clicking identify, in some cases you might have a business, a company that might have you might have a trust or a company, or you might have a director or a beneficiary that actually isn't working within the business. And provided that they're actively involved, you can also get them as a business participant, and that's where it's critical to basically identify here. And once you've actually done that, and you've identified the eligible employees, so going back in terms of the paperwork of the employees, there's actually a requirement that for the employer actually needs to give the employee notifications, and the employees basically need to sign the notifications to basically say that they're allowing the employer to use them as for the JobKeeper. And I think what you should really be careful of is ensuring that the details are all up to date and up to scratch, because you might have someone start after a particular point in time and you might think, oh, they might be eligible for it. You've just got to be very wary of it. Okay.
Frank, we actually have a question just on that point. So I was debating whether to butt in now or ask it later. Yep. So Joe asks a question. He has 2 questions, but I'll ask his first question. Yep. As a business, we are entitled to JobKeeper. If I employed a new employee on the 11th of May that was previously employed by my competitor but retrenched 2 weeks ago, so let's just say that takes us to the end of April. Yep. I have no idea if he was retrenched because of COVID-19. Am I entitled to claim JobKeeper for him being an eligible employee on my books right now?
I believe the answer is no.
I believe so too.
Yeah.
And my understanding, and please chime in when you're ready, but my understanding is the participation of the employees component of this scheme is to ensure that there's no double dipping, because the ATO and Centrelink register the tax file number, and you only get, as an employee, regardless where you're at, you only get one employer gets to take you through. And in fairness, it's not about taking you through. If you're earning more than $3,000 a month, you are not entitled to receive anything over and beyond the 3,000, let's just say. But if you're under, it's subsidised to $3,000 gross.
Yep.
So in the case of Joe,
Mm-hmm.
is it fair to say that most likely, and I think you guys answered this, he's most likely not able to make that new employee in his business eligible. However, the employee, Joe, can qualify with you as to whether they actually accepted to be part of the JobKeeper payment scheme with the prior employer, because the chances are he may have, and there's also the chance that he may not have. And if he has not, you can, is my understanding. If the employee has not been registered by the previous employer, Frank,
Yep.
the chances of Joe, his new employer, registering him is possible in the next reporting period being the end of May.
From my understanding, and I think look, this is all sort of new in many respects, because I know that there's always questions asked and there are always various bits and pieces. But from my understanding, it's the only time it sort of will carry forward is if there potentially could be some form of a carry on or like a restructure of some sort. But at right here, right now, I haven't actually seen anything in black and white that sort of basically says that. Some of the instances of what I've actually seen is if you've had someone as a casual employee, and say they then go and work for somebody else on a full-time or part-time basis, that's where it actually would stop. But as I said, I haven't seen much on that from our perspective. So,
and my assumption is more from the double dipping approach versus, which is why the government and the ATO and Treasury needed to know who was actually being taken on board and eligible as the employees.
Yep.
Over to you, man. Thank you.
No worries. So obviously we're going down the path of identifying the employee. So we've just covered off that in terms of the eligible business participant. And then what you're required to do once you've actually identified it, in the various softwares, your Xeros and your Miles and QuickBooks and all those sort of things, there is a process of how to process the JobKeeper payment. So some are simple that you've just got to simply do a registration. And then there's going to be a requirement where if you've got an employee that's actually paid under the $1,500 per fortnight, that there's a top up. The critical thing, and this is something that I've sort of heard a lot of people, and I've got a lot of people have actually got this wrong, is in relation to making sure that payments are made within the fortnights. The ATO had given some extensions, in particular up until the 8th of May, and they were for the first 2 fortnights. But unbeknownst to people, 2 days after that deadline was the end of the 3rd fortnight. So there would have been many people that probably would have been caught because they thought, oh yeah, we'll only have to pay $3,000 and I'm basically covered. And you know, it's basically a bit of a trap. So there are instances where if you do pay people on a monthly basis, that as long as over the period you're paying the $1,500 a fortnight, they will accept that. But in all honesty, I have given all my clients like a spreadsheet of the dates, and just make sure that with your employees, you just make sure that you make your payments of the $1,500 before the deadline. And now, once assuming that you've done all that, there is a monthly form that needs to be completed, and that is usually due by the 7th day at the end of the month. Now, the form for April has been extended for the 31st of May, but the sooner that you lodge it, the sooner that you'll get it. So if you lodged it in the first week, most likely you would have got your refunds by the Sunday. Anything after the first day, we're now starting to see them flow through. So the sooner you get it in, the more likely you will get it.
So just to clarify on that, so the first day of notification, step 3, was the 4th of May, last Monday or Monday week ago.
Yep.
If you were in that batch that notified and confirmed your revenue for April and your projected revenue for May, preferably in accordance with the way you typically report on your GST, preferably is the key word there.
Yep.
So it saves unnecessary conversations with the ATO in 372 days now. So the ability to get in on that first day meant that by Friday, and Frank said Sunday, but I'll say Friday, most payments were made. And what we're seeing now, because we're starting to get some of our clients saying, we haven't received the money yet. And the key thing is, if you got in early, you beat the rush. If you got in on Tuesday or Wednesday and you still have a chance to get till the 15th, you definitely you'll receive it, because there's not many questions asked, but it may be in the next week or so. Just a question: if you don't qualify for April, can we compare to May? Can the alternative test, because we had a drop in May versus May, or whatever the test may be, Frank? Yep. Can I, if I missed out on the April, can I enter the scheme in May?
Without a doubt. Now, like there is a little bit of a trick with it as well, because the sooner you identify it, the sooner you go through the steps.
Hang on, when I hear accountants say tricks, I get nervous.
No tricks.
No tricks.
Yeah,
black and white.
Magician, black and white.
So, Stefan, in the first couple of slides, we talked about you can enter the scheme, you can enter JobKeeper at any point up till the end of September. So, as Frank's saying, it's if you say to the ATO that you are enrolling for May, then you are not eligible in April. So then all of this starts at the end of May. So,
Thank you.
I agree with Frank, the earlier you get in, the better. In regards to the payments question, we've heard unofficially from the ATO that they are making payments over the weekend and on a Wednesday night, and they're not making any other payments. So keep an eye on your bank accounts on Mondays and Thursdays, because we had quite a few clients get their money today. And I've just had a look. The answer to the question about employing a new employee now, one of the main rules is they have to be employed at the 1st of March by you. And there's actually a specific exemption, a specific exclusion if you employ somebody after the 1st of March.
Brilliant. Thank you.
That's okay.
Thank you for that clarity point. And again, I appreciate you looking into that right now, because there was a follow-up point on that from Joe. So, and Steve, I believe we've answered your question as well. Thank you. Thank you, Darren and Frank. Over to you.
No worries. So in relation to the payments to the employees, it's critical that if you're using the software, your Xero and your Miles, that you process it per their recommendations. I know that both Xero and Mile, from the start, there's been some changes. So if you don't process it properly, you will find that there will be a delay in the payment. So it's important that you get it right, because I can tell you, clients that have been trying to contact the ATO to get things fixed, they've been absolutely inundated. We can get in because we've got a special hotline with them. But like for the average business out there who's trying to do the things themselves, unfortunately, that and if you don't do things the right way, it's going to take you a bit of time to get you through to the next bit.
So do you have any examples on how people may be doing it wrong?
Yep. Like I know that where we've got instances of the bookkeepers, like with MyOb in particular, when you actually start off with a particular employee, you actually have to denote within the STP the first period that you're paying, that you're applying for the JobKeeper. So it's got basically option 1, 2, and like saying you've got to create these codes. The thing is as well is that with certain softwares, and I'll talk in relation to MyOb because it's a little bit of the more clunkier one than the Xero. but no disrespect to the mild product. That if you don't actually use the exact terminology as being the top up in capital letters, it's also been known that the ATO do not pick it up either, and it creates a separate line item in the STP. So I've had some fun in fixing that up for some clients who had that issue, where they've said, look, let me have a look at it. And I said, well, you haven't followed the instructions. So we've gone through that, but we needed to contact the ATO to reprocess it. So,
and the other one we found, we got a lot of phone calls last Monday and Tuesday from our perspective, which again, we were able to answer this pretty clearly, but the GST income,
Yep.
Is GST income, Stefan, inclusive or exclusive? That was just a very obvious place where people were a little confused or not sure.
Yeah.
And it sort of stalled a little bit of their press and go. Did you see that as well?
Yeah, we did see that. And the other thing is, just so that people do know as well, is that some of you may have already received some of the other things being the cash boost, and those in Victoria may have had their payroll tax refunded. And in some cases, what we've heard and seen are some clients are actually including those sort of figures in the GST turnover. It was only about 2 weeks ago, it was 2 weeks ago, where the ATO basically said those sort of items aren't included in the GST turnover. And in some cases, people, if people look at your zeros or your actual calculator, and you've actually put it in that it's going to be picked up, and say, this is whether it's the cash boost or whether it's the state government one. Some people have actually included in their turnover, and as a result, they might have not have had a 30% drop, but if they took those amounts out, they would have had a 30% drop. So you've got to be important about putting things in the right place, because if you don't put them in the right place, your zeros, they've got great tools, but at the end of the day, if you're relying on a tool and you've actually entered the information incorrectly, it's not going to give you the right result.
That's a great point. I love that. And in fairness, if we just remember, your GST income is operational income, not investable or gifted/stimulus income.
That's correct. Yeah. Correct. So that's a very important point to make,
And as it relates to that, Frank and or Darren, what if a year ago I had a bad debt? What if a year ago I decided to take off my balance sheet a slab of aged receivables because it was a confirmed bad debt? What does that do as it relates to the comparable period? So Joe asked the question, a year ago we had a bad debt that I had to write off. And I love this question, by the way, because I'm sure others are in the same boat. But now that we're talking about operational income, I wrote it off, so I didn't take it into my June period and therefore be taxed on it at a company level or whatever, or at annual level. How does writing off a bad debt relate to now I'm not under 30% this year versus last year, if I'm going cash on a cash basis?
From my understanding, it's all based on sales. So, when you've actually written off that bad debt, like let's say you're on accrual. So if you were on accruals and you wrote off that bad debt, most likely that invoice was raised 12 months ago. So it would actually be, I believe it would be irrelevant. Even from on the cash basis, it's only based upon when you receive the cash. So if you haven't received the cash, it's not taken into the equation at all.
Magnificent.
I think, in my opinion, you would have an argument.
Yeah.
I think so too, because one is a clearing of the balance sheet, not the actual work or the sale, the operational work performed.
Correct.
Yeah,
so I think, because I've worked with a client in the same situation, and we ended up looking at the quarter instead. So, and they ended up passing for the quarter. So it ended up being okay.
And it is a fine line that's definitely ambiguous as to which way it goes. So, Joe, I think based on what you just heard, and definitely get further validation from your accountant. I'm of the same opinion as Frank and Darren. I think it's definitely it's in your favour to move ahead and claim.
Yeah, and I mean, as much as Frank said, we believe the ATO are going to go and check. They'll probably check, we believe, they'll probably check June BAS this year to June BAS last year, March BAS this year to March BAS last year. So if you have a drop of any sort on that BAS, how much they're going to look at you, we don't know, but you tend to think that they'll probably leave you alone. And depending on your industry, we believe quite strongly that if you're in an industry that was closed down, they're not even going to bother looking at you because, and the government's clearly putting pressure on the ATO to release the money. So I'd say, as we've said in the next slide, and you keep saying, keep your paperwork and keep it, we don't know how long for. We've got no idea. So,
and the other part to, sorry, Darren.
Paperwork and record keeping is key here.
And the other part to this, just in case some of you are getting a little creative, and just like the Chinese stockpiling iron ore right now for the boom in December, in the December quarter or possibly the March quarter 2021, please don't give me a hockey stick in December.
Yeah.
Please don't load up your invoicing in a mischievous sort of way in December because you held back invoicing until the end of September. Please just be very careful because they're going to be looking at that and you guys are the first in line. You guys are actually going to be spoken to in 210 days, not 363. So be very careful not to be holding back and then stockpiling invoices for a later period because that will show up in the way you register for BAS. Record your BAS and or report on it. And they're the first trigger points. They're the obvious points of reference for them to come knocking on people's doors. Rest assured, we're getting looked after for 6 months. It'll be 60 years to pay it all back. Don't contribute a massive slab of paying back in the first 6 days after September. Anyway, back to you, Frank.
That's
Darren.
right. The monthly report, as previously sort of explained, the 7th at the end of the month. So at this point in time, we've only got the extension for the April one. So the one for the next month would be basically due the 7th. Now, chances are I don't think that's going to still happen because in terms of the record that the ATO actually have, and they've just been inundated. There's been instances where forms have been actually incorrectly completed that at the moment they can't actually amend it from their end. So I think we're probably going to have another month of a little bit of grace, but at some point in time, it's going to be, it will basically be those 7 days. So it's going to be very important to make sure that your books are up to scratch. When I say up to scratch, you make sure you're with your debtors, your collections, your bank recs, all that sort of stuff you're actually on top of because, as I said, if they turn around and say that you have to do it within that 7-day period and you don't, we don't know what ramifications they are. Could it mean that you'll miss the first lot of payments and then you've got to wait another period? Possibly. For those businesses that, I guess are relying on the cash, and to basically help keep your employees employed, it's just so important just to keep on top of it so that you can actually get the money from the money that you're entitled to. So in terms of that, so you've got to give the projected GST turnover, and I know that we've covered off that already in that point there. Important points in relation to the projected turnover. As Stefan's actually stated already, just be realistic because the ATO they know it's an estimate. So once you go to the end of May, just compare your estimated actual and learn from it. So if you, for example, you see that you've either overstated it or understated it, find out why. There might be things that you might be doing better. Now, look, the thing is, guys, the most important thing is that once you're actually in the JobKeeper, and you're in it for all the way. So it's not about doom and gloom. It's about how you can strive, how you can push forward, and how can you make the most of this situation. So as I said, best making sure, keep all your calculations, records, and etc. safe. There's no guidance in terms of how long you need to keep it, but based upon what we believe, possibly it could be a 4-year period. But look, it's at this stage we don't truly know. It depends on how the ATO go about in terms of chasing this. What have we got? Well, that's basically the end there. So,
well done, guys. That was really cool. Okay, so there's a few questions here. Andrea, with JobKeeper, if I get some help, in other words, dollars from the government for my employees, but my employees earn more than the receipt of JobKeeper, do I pay the difference, or am I not eligible for JobKeeper? I think this would be... So if I'm reading that question right,
so I'll jump in, Stefan. So if it's a reimbursement of what you've paid already, so you cannot be in front as an employer. So the only way that can happen is if you are a eligible business participant, and if that's the case, then the eligible business participant is taxed on the money.
And can you explain that a little further, Darren, so we can just simplify that?
Okay, so
what does an eligible business participant actually mean?
Okay, so in simple terms, if I know none of your clients will be in this situation, but to simplify it down, if you ran a company and you were the director of that company, you had no employees, so it's only you, and you pay yourself with a dividend, then you are not an employee. But because you're actively involved in the business, you are an eligible business participant, which means that the company gets the $1,500, and then the person that is the eligible business participant is the individual, but that company will be taxed on the $1,500.
Great distinction. And if we were to use a different reference or a different scenario, let's just say it wasn't dividends that you were receiving as your income from your participation in the business, but it was a regular monthly owner's drawings reference. Does the same thing apply?
Same thing. And if you're in a trust and you get a trust distribution at the end of the year, then it's the same thing. And then I wouldn't expect you to have many sole traders, but sole traders are the same, that they get they're an eligible business participant, they get taxed on the $1,500. But to go back to what I think the question was, the $1,500 that comes in is income. You've paid the employee $1,500, so the net profit to the business is zero. So the business does not get taxed on it.
And if we were to look at that in a different way, if Andrea, let's say, was paying his employee $1,200 a fortnight, and therefore the JobKeeper was received at $1,500, he would need to make up the difference between $1,200 and the $1,500, which is $300. Is that right?
He would have had to have done that already because it's a reimbursement system.
Yeah.
Unfortunately, you have to pay them first.
Yeah. So either or, Andrea, if you're paying in gross dollars over $1,500.
Sorry, gross.
Fortnight,
yes.
If you're paying over $1,500 and drought, then you don't need to reimburse anything. If you're paying under, you need to top it up to, and we're talking gross. Is that accurate, guys?
Correct.
Yeah, and effectively the top up, no super required to be paid on the top up.
Great. And again, if anybody has any direct questions that you'd like to reach out to Darren and or Frank. Look, Darren and Frank have been in our community, a business benchmark group, for a very long time. They know many of our clients. They're actually accountants of many of our clients. So if you wanted to reach out in the next week or so and speak to either of the guys, they're very accessible, very customer centric. They have the DNA component of business benchmark group. So please feel free to do that. The presentation tonight will be uploaded to our resource centre in the next 12 hours or so. In saying that, it'll be there for your further consumption and clarity. But if you need a mouthpiece or a direct mouthpiece on it, please reach out to the guys. They are CPAs and accountants. We are obviously, we do what we do, but we rely on our compliance partners, which LMP are one of. And please feel free to reach out to them. They'll be very happy to take your calls if we don't get to your questions tonight. So next question from Diane. So not the G1 value from the BAS return, which is very technical, Diane. So I know what a G1 is. I guess 90% of the people on this call would not. But G1 less GST collected was something which must have turned up about 4 slides ago. So are you guys able to answer that?
Correct. So it's if G1 is inclusive of GST, because you have a choice, then you exclude GST. Just keep in mind that their turnover includes GST-free sales, if you have any. So basically the easy answer is, like Diane's saying, G1 less GST is generally a good indication. But just make sure that you are including GST-free sales.
Brilliant. Thank you. Good clarity point. 3 more questions here. Joe, is this your 4th question, mate? Love it. That's an active participant, I've got to say. You get a prize. According to the ATO, to be eligible for the JobKeeper payment for, say, the period of the 11th to the 24th of May, you must pay the employee on or before the 24th of May. This is a Sunday. And it's a holiday, Joe, which is a Sunday, of course.
Yep.
We would usually pay for the week ending 24th on, say, the Tuesday the 26th. So we would therefore process the STP on Tuesday the 26th. Is this a potential problem for me?
Definitely. It depends on the previous fortnight. So when did you pay the other? It depends what you paid in the, because what you've got to do, it's the payment within the fortnight. So the fortnight, as I mentioned earlier, the last one finished on the 10th, which was last Sunday. So the new period started on the 11th. So you just got to make sure that $1,500 is actually paid within the fortnight.
Brilliant. And we've had, Joe, just for your heads up, and anyone else listening here, we've had probably about 10 to 15 clients change their payroll dates to be aligned with this period and this situation. So it won't be a problem for you to backtrack 3 or 4 days and then make that your reoccurring fortnightly payment if you're doing that for the next 20 weeks, I guess.
Yeah, the thing is, the ATO. The thing is, it's important because with STP, it's very clear. It actually says the dates, and I can guarantee that what's going to happen is that it will probably be rejected. I'd guess, but it's just a guess until someone doesn't make the payment. Well, I guess that's the only way we'll know.
So we got 4 questions here. I think we've answered 2 of the 4. Do I need to pay super for employees on top of the JobKeeper amount? Give me 10 seconds on that. You've already done it.
So if they are working, so the easiest answer is if they're working and you've paid them $1,200 to do their job, then yes, you pay super on that. If anything is a top up, you do not pay super on it. It is not included for payroll tax or work cover in Victoria.
Beautiful. Andrew says, I haven't received any payments. I'm waiting by the mailbox or the pigeon drop. It's not happening yet, but I've heard other businesses have. Am I not eligible? No, you are definitely eligible if you've already put your hand up for it, according to you. In saying that, you may be in the pipeline or the obstacle called the money's coming.
Have you done?
Get in on the
just
4th.
Make sure he's done steps 2 and 3 properly.
Yeah.
Great distinction.
And then the other thing as well is if he's, instead of waiting, I'd be more proactive and actually contact the ATO and confirm, have they received, have they got all the information? And then from there, you might find that there's maybe something missing and hence that's why it's been held up.
Or if you've got a decent accountant,
yep,
and decent being the key word, just nudge him on the shoulder tomorrow and they should be able to do that for you before you get brain damage trying to do it yourself. Okay, Tim asks, Is this turnover test related to only turnover in Australia, or does it include overseas operations as well?
The rules say that it's only turnover in Australia.
Great, thank you. Alison asked, which is the last question, guys, and thank you. Great job, but we'll do a conclusion in a minute. What happens if my employee resigns?
Frank, I'll leave that one with you.
All right. When the employee leaves, you're actually required to notify that they've left. So that's part of STP. And as soon as you do that, effectively, it will basically end. Now, what we do not know is that because of the way the fortnights work and when the payments are basically made, we believe that if that employee is being paid at least the $1,500 for that fortnight, that would be fine. However, obviously, in the future fortnights, you're actually required to notify the ATO that person is no longer eligible for the JobKeeper.
Magnificent. Just very quickly, your website, what is that?
lmp.com.au.
Thank you. And if we can trouble you with a phone number, just verbally?
9723 7100.
So 9723?
7100.
Thank you. I think that's a magnificent sharing, and we're right on time. It's 6 o'clock. So no further
Stefan,
questions.
Can I just add one more thing, please?
Yes. Yep.
So for those businesses that are based in Victoria, you might have heard about the Victorian Business Support Grant. So originally they had 19 industries that they were paying it for, and they were very strict on that. As of the 1st of May, they've said that any business in Victoria that it's received JobKeeper that has a turnover under has payroll under 650,000 for the year is now eligible for it. So if you applied for it and were rejected, they are re-looking at it automatically. If you have chosen not to apply, you can apply now. They'll ask you to prove that you're enrolled for JobKeeper. They'll ask you for your March BAS, and then you'll get the $10,000.
And interestingly enough, we went out to all our client base on Tuesday or Wednesday with that, because we sort of got the news very quickly that had been altered last week at some point. And we know that many of our clients had attempted, and they were outside those 19 industry groups, and many of our clients went back and sort of pushed it a little, and some of them have already received the $10,000.
Yeah.
Amongst other things too. I mean, the state government's actually got some really good initiatives for the micro, smaller size businesses. There's some amazing. I mean, we've had clients that have also received grants from various places. One of them being a dating site. So for anyone that's divorced and or looking for husbands or wives and plays the field, and then there's nothing wrong with that, I guess, if you're into that. There are dating sites out there giving you stimulus of a different type, being money. Last question. Also, you've got to have some fun with this too, otherwise we're dead.
Yeah.
Also, if the business doesn't have enough money to pay me, as a business owner, can I offset this against my loan account?
Are they an employee or are they an eligible business participant?
Yeah, I'm not sure. Okay.
So
also,
if they're an eligible business participant, you don't have to pay them the $1,500. That's right, isn't it, Frank?
Yep, that's right.
Yeah. But if they're an employee, then if you run it through, I have been told this, if you run it through STP and instead of actually physically paying the wage, you run it through your loan account, because it's gone through STP, it's still okay.
Brilliant. Great answer. And again, everything we've shared tonight is not gospel. It's in many ways our opinion. It's our most up-to-date, learnt through experience and or further research. The disclaimer at the start is real and alive for LMP Accountants. Diane, it'd be good to hear from you very soon. Please reach out. We need to speak. It's been a long time. Thank you for your questions. And to everyone else, thank you. And to yours, Darren and Frank, thank you so much for sharing your time and being very generous with your area of expertise. And as always, succinct and to the point and very well articulated, although it's a very dry subject. And I'm looking forward to going and do some star jumps to get some energy back in. But in all fairness, it's a serious topic, and I'm glad we went with the update versus anything else tonight. So thank you, and look forward to seeing you guys very soon. Hopefully we can do a high five and you guys can buy lunch very soon. Look forward to that. Thank you, LMP. Thank you, Business Benchmark Group community. Thank you, Business Benchmark Group alumni. If you're needing any help and you're not already within the active community, please reach out to us. You don't need to be a paying client to be active and participating in what we have to help. Obviously, if you are paying, then membership has its different privileges. But in saying that, we're here to help and not keep anyone in the dark. Thank you. Have a great evening. Enjoy your families. Give them a kiss. Thank you. Have a good evening.
Thanks, Stefan.
Thanks, Stefan. Thanks, everybody.